So, what do you do if you're not investing in meme stocks? Well, due to the influx of investors moving all of their funds from these secure and startup companies and putting them all into these memes, there is a sale going on in the entire stock market. So, especially the TSX, the Canadian stock market, it is down nearly 20% last week. Just last week, companies in the TSX who have had huge run-ups of 50 to 60% leading up to Wednesday of last week had dropped 20 to 30%. So these startups like HITI have been climbing and then suddenly dropped and now are recently starting to pick themselves back up. There are many stocks here that I will mention in a list in the description. If you have any other stocks that you think are very good investments right now, put them in the comments and I will let you know my thoughts on those. I can do a little analysis and give you a rundown of the news, and I will comment on every single comment here of what stock you want me to research, so then I can make sure that you know what you're getting into if you want to invest in one of these stocks that has gone down. My personal list is heavily weighted towards biomedical, infrastructure, and clean energy, because I believe with these meme stocks making people accidental millionaires, then that could actually cause a boost in infrastructure as well as housing and these products that people who now have a lot of new wealth no longer are you in a basement apartment or in a family basement. You can move up into a $1 million home or something a little bit more affordable, so you can keep your gains. Keep your gains from all of those stonks. So the following is a list of stonks that are a little bit less meme-ified and a little bit easier to securely put your money in. MindMed is a company at the forefront of psychedelic research, using it to treat PTSD as well as many other psychotic disorders, so it is used as therapy. Future legislations are in place that can be approved for this sort of treatment, and once regulated, MindMed will be skyrocketing. I have my limit sell set to $6. It is currently valued under $4, and that sell is not selling all of my stocks. It's just hopeful that we'll get a really big spike the next time Kevin O'Leary talks about it again. My next pick is JNH, which recently hired on a new chief financial officer, which since then they have steadily climbed, and even despite this devastating turn of events with a lot of people moving money out of different funds to go into AMC and GME, JNH has actually held strong and is continuing to grow. So this is a very safe investment to put your money into. Another company that is focusing more on clean energy as well as oil and gas, which does not seem to mix, but what they are trying to do is create net carbon negative within this industry. They are very strong in Alberta. This is QST. They were recently valued above $3.5. However, they have gone down below $3 and are constantly fluctuating now until the confidence is about to go up once again. QST is very comfortable in its position in Alberta, but recent rumors have said that they will be expanding into other provinces of Canada and creating a larger marketing campaign to bring on stronger clients. They have recently finished many commercial jobs that is allowing them to have the capital to expand further. This is a infrastructure as well as oil and gas as well as clean energy. So this is a catch-all stock that you can put a couple eggs in this basket and ride that up to the sky before those eggs even learn how to fly. As I've mentioned before, HITI is one of those rolled green leaf stocks. Saying that, of course, for monetization. HITI is a fantastic thing there. FAF, Fire and Flame, is a retailer that is expanding across Canada, which is a secure investment. They've recently gone down around the 80-cent range when their evaluation is clearly up around $1 full. So that is a good sale to get in on while it lasts. And then the last one is Fire, F-I-R-E, on the TSX, which is Supreme. They are a great company that has consistent growth and recently has warrants that will allow more stocks to be on the market. Yes, it has gone down to 17 when it was previously up around 18 and 19. It has had highs of 23 cents, as I believe it will be hitting by the end of this month. There are projections that it could go as low as 12 cents. So maybe just watch and see if it does go down or if there is a spike in interest, and then you can hop in there and secure a 10 to 20% profit easily. Even though I do not entirely agree with how Wall Street Bets operates, I do understand their sentiment to try and bring some of this profit away from the millionaires that are currently investing in these hedge funds. However, I do not think that these wealthy people should be losing so much money. Many of the individuals that could be affected by this are extremely charitable, and those charitable donations will be halted this year simply because they have lost so much from their previous investments in hedge funds. However, I am fully against the hedge fund operations that continually bully failing companies. Hedge funds bet on companies to go down and then project their bets on the company to go down out to the world, so then everyone on the public can see, oh, this company is failing. Look at all the hedge funds saying it will go down. And then that destroys the company even sooner, regardless of their positive news about any form of innovations. Aside from these bets that short the stock and make it go down, once these stocks reach an affordable minimal stock price, there are times when a hedge fund will buy up the entirety of the shares of the stock. This forces that stock to go even lower and for that company to sell everything to make up for these losses. And then even though these hedge funds have a majority share and stake in the company, they are not accountable for all of the debts and losses that are acquired by these companies when they foreclose. That unique position is what caused Toys R Us to close years ago. Luckily, here in Canada, somebody had bought up the franchise that was available in Canada. But everywhere else, Toys R Us is essentially dead, and there have been many other companies affected. Understand when you're buying into these companies that they are publicly perceived as failing. This means that you have an extremely high risk of losing your money if this short squeeze does not go through. If you are deciding to play the stock market like a game and see your stats go up and hopefully acquire more funds, I believe that this is a strategy that will fail. Regardless of if you make money now, you will lose it in the future. Do not be fooled by a giant list of stocks that have an unlimited number of shorts. Some of these numbers are completely inflated in order to dilute the market. As well, these stocks are not all going to be shorted at once. As I've stated before, I am not a licensed financial advisor. This video is for education and entertainment purposes. Do your own research and never take out a loan in order to endanger yourself and try to beat the interest rate, especially a cash advance from your credit card that you would need a 20% return every single month in order to make money. Please, I sincerely hope that all of the money that you put into the stock market is money that you're willing to lose, especially if you're investing in these risky investments. So if you're curious about the background here, this is my cafe that I actually own. I own a board game cafe here in St. John's, Newfoundland. It is currently closing at the end of this month. I am selling my board games, which actually went really well. I've sold over 300 board games for over $3,000. If you want a more in-depth analysis of how this business went, as I started it in 2020, just before the pandemic broke out, a very social business model. If you want to know how I survived an entire year and whether or not that was a struggle for sure, give this video a like and let me know in the comments. I will certainly cover it in the future. Thank you.